three strategic priorities is to drive sustainable growth and value. So that will include our financial metrics, ROE, cost to income, ETC, profit growth. But outside of that, when we look at the social, environment, and economic principles, priorities are, financial inclusion. Considering the demographic of our country, we know that we need to do a lot to bring, the youths into the finance and investment space. Other areas that we are focusing on are around green energy, okay, and really the youth, value proposition. So sustainability is extremely important for Stanbic. If I can just briefly talk about some of the areas where the group has invested significantly. For example, in financial inclusion, we've trained over 15,000 women, providing financial development classes and extended credit that's close to 80 billion shillings. One of our other subsidiaries under Stanbic Uganda, the Stanbic Business Incubator, has trained over 2,300 SMEs in, essentially, business skills, record keeping, governance, etc. So our different interventions in those areas are carried out by, the different entities. So if I reflect on, the role that we can play significantly as SBG Securities, and Jacinta has talked about it, I think we have a wonderful opportunity for the issuance of, or supporting the issuance of green bonds. And we can learn from some of the markets where we've done this. For example, in Tanzania, Standard Bank led as an underwriter and the lead book runner on the issuance of the first green bond in Tanzania by CRDB Bank, which raised about $60 million, but the program, I think, is much bigger. It's up to $300 million. And it was oversubscribed about 400%, and there was a lot of appetite for it. So I think, for me, when reflecting on, where we are as a market, that is an opportunity that we can use to develop our capital markets, to diversify the base of securities that we have, and also to provide products which, first of all, are raising capital to deal with sustainably linked investments, whether it's on the social front, whether it's green linked bonds, whether it's housing, and whatever fits in the category. So that's sustainability from the bank's perspective. It's a core area of focus and priority, and we've done some investments, to ensure that it's embedded throughout our organization, and we are tracking all the metrics regularly. Thank you.
Thank you very much, Grace, for just exposing some of what Stanbic Bank has done. I think very strong on the S, the social aspect, and just giving back to the society. I think that's very interesting. I also like what you said about the opportunities, things like green bonds, and just looking at what has been done in the other markets. I think that's very impressive. Cynthia, you're a regulator with some experience in the capital market space. Just help us to understand the regulatory landscape when it comes to sustainable finance. What does it look like?
Thank you, Miriam. So when we speak sustainable finance, from a regulatory standpoint, we look at it in three dimensions. First, on an international level, we have Uganda being a signatory to the United Nations 2020 Sustainable Development Goals, and it's also a signatory to the Paris Agreement, which aims to combat climate change. On a regional level, we've seen core regulators in the region incorporating or integrating ESG in their regulatory framework. We've seen the Nairobi Securities Exchange issue out ESG guidelines. We've seen the Capital Markets and Securities Authority of Tanzania issuing out governance and subnational sustainability bonds regulations. And just recently, we've seen the Capital Markets and Securities Authority of Rwanda issue out corporate governance regulations, which all underscore sustainability finance in their industry. Now, to bring it home here in Uganda, first we will look at the National Development Plan, the third National Development Plan, which has domesticated these international agreements and also gone ahead to require that all entities incorporate the same within their framework. Now, to bring it on a national level, we also have the Companies Act under Table F that requires all entities, especially public business operations, but also they encourage private companies to also onboard some aspects of Table F. Now, just to bring it home to Capital Markets Authority, we have two pieces of regulations that we are working on, and one is the corporate governance regulations, which aim at ensuring that boards both disclose and report on ESG and sustainability matters, but also they integrate sustainability, development, and success within their business operations. Now, within we have also seen other regulators in the financial services sector, like Bank of Uganda, issue out ESG guidelines just recently, and also they have two new pieces of legislations, corporate governance regulations for the financial institutions and the microfinance non-deposit taking institutions, and they all underscore corporate governance, they all underscore sustainability issues. We've also, I think, the Insurance Regulatory Authority is also working in the pipeline on ESG guidelines. So we see the entire industry is working towards incorporating sustainable finance within their frameworks. Just one thing that I need to note, there is a varied approach to sustainability, and this has opened a gap for, this ambiguity has opened a gap for issues like greenwashing, information asymmetry in terms of data that is produced and so forth. So we still have a long way to go because of these issues, but we are making strides and efforts to ensure that sustainability finance is incorporated within the legal framework of Uganda. Thank you, Miriam.
Okay. Thank you very much, Cynthia. I think Cynthia has done a great job of helping us appreciate where we are coming from at a global level. I heard you talk about the Paris Agreement, and then at a regional level, what is being done in countries like Rwanda, and then, of course, at a national level with the amendments that came to the Companies Act 2012. So it's really given us a very good context. Mr. Mubali, yeah, you are with Sanlam Investments, one of the largest asset management firms. You deal with institutional investors all the time. In Uganda, we say, funirawa, you know, should sustainability really be something that institutional investors care about? If I'm a pension fund, why should I be concerned about sustainability? Is it a distraction? Is it something that I should really be concerned about as a trustee of a pension fund? What are some of the benefits of sustainability when it comes to financing?
Thank you, Miriam. I think from an investment perspective, the benefits that are major that accrue to investors come in two categories. The first one is a return on investment, and the second one is in a shape of managing risk. So in the first instance, our experience has shown that investing in businesses or companies that are very cautious and that are striving towards becoming sustainable. As you are aware, sustainability is beyond ESGs. It's making sure that you do a business that is not only good for the environment or social and governance, but also it's good for you as a firm. And our experience has shown that companies that score highly in terms of ESG and sustainability factors tend to also outperform companies that are not high up in the index. Most managers do have their own way of scoring. Bigger firms, of course, have more resources, but the messaging is clear that sustainability is something worthwhile investing in. The second aspect is on risk management, which, again, risk usually doesn't come to the forefront. But I can give a quick example of an investment we had in Kenya in the property kind of sector. And this particular entity had gone a long way in ensuring that they have health and safety policies and had hired experts to manage health and safety issues. They had invested. It's not all the time that you'd find a developer hiring a consulting firm to guide them on how to minimize such incidences. And indeed, an incident happened, but because they were well prepared, it minimized the, can I call it, negative press that would have gone out, or the loss in confidence that would have resulted from such an incident. And in fact, no lives were lost, simply because a lot of measures had been taken into account to secure the operation. So managing of risk is also another way that being sustainable, being cautious about ESGs helps us as investors. It also, to a great extent, manages reputational damage that would have resulted from that. So those are the two main areas that we see a lot of value. Thank you.
Okay, thank you very much, Mr. Mubale. As you're speaking, I was reminded of a research that was done by McKinsey, and their conclusion when they did this research is that investors are willing to pay a premium for companies that are well governed. So, I mean, if you're a company out there and you're interested in, institutional investors coming in, you have to take into consideration environmental issues, social issues, governance issues, other aspects of sustainability. And we've heard from the asset manager, and he's the one who helps trustees when they're making some of these investment decisions. I think it's time to hear from the exchange again. Jacinta would like to know what the stock exchange is doing in this regard, but also as the primary regulator of these listed companies, I'm sure you have observed some challenges when it comes to issues of sustainability, issues of sustainable financing. We just want you to give us some observations, things that you've noted when it comes to this particular area.
Okay, thank you, Miriam. And as I'd just spoken to earlier, the mission statement of the exchange speaks very greatly in encouraging customers and also promoting sustainable investment. So it's something that as an organization we are quite passionate about and very keen on. So a number of initiatives are going on as well. Maybe I'll start to speak with the preparation of the guidelines that we'll be issuing already in the offing and should be out early 2025, which will concretize reporting mechanisms specifically on sustainability and on ESG for the various issuers and the listed companies that we regulate. But also, aside from that, I must say that we've seen great improvement and great reporting from the issuers, and you can even, if you take time to look at the annual reports from the various issuers listed on the exchange, you'll see a lot of mention on the sustainability initiatives that they've taken. For example, you'll see detail on how much paper has been used and the reduction actually in that going paperless. And that speaks greatly to a shift in the positive direction on the side of ESG. We also, I encourage you actually to take time and actually look at these annual reports to show that there's a significant shift And I'll also speak to, Cynthia has already spoken to the ongoing guidelines that are also in the offing from the CMA side, but we also have the IFRS S1 and S2 standards, which speak a lot also and have been guiding to some of these listed companies, and this is why we see the discussion ongoing. So even the fact that we're still in the preparation of these guidelines, we still continue to see and also encourage our issuers to continue to report on that. And I guess also must speak to the initiatives even within the exchange. For example, we have an ESG masterclass that is intended to demystify what ESG is, but also to encourage a number of not only issuers, but even the public on how to implement ESG policies in their framework and also in their organizational dynamic, but also how they can take advantage of implementing this. And my colleague Sarah is over there. She handles, Sarah, if you could wave. Yeah, Sarah handles the ESG masterclass. So if you're in the room and you really want to know more, that lady over there is the person to go to with all the detail that you want. And we will be having an ESG masterclass in the month of November, around 20th to 22nd. And that goes to show that indeed this is something that's very close to our hearts as the exchange. And still, we, on the side of social and also bridging the gender gaps, I'll start with this week. We had the Women's Investment Breakfast, and specific to women, no offense, the gentlemen in the room, but this engagement is just to encourage, create awareness and also balance the playing field for women to understand and give them this opportunity, a safe space, and to also learn and engage, because ESG is not only environment, and from the initial discussion that we've had, but also to feed into that social aspect. We have a number of CSR events and ways of giving back to the society. We've previously carried out also university challenges to be able to speak and build awareness about the exchange, because we are not just the stock exchange, but also still giving back to the community. We've also had events, Ring the Bell for Gender Equality, still speaking very greatly, and also to the entire discussion on ESG. I must also mention that we had the first paperless IPO in Africa. I expected some hand claps. Yes. So that goes very far and into the discussion on ESG. And this was during the Airtel IPO. And so as an issuer, they started off on a great note as well. But also this goes to show how far this discussion is going. And I would say that the exchange is making great strides in that perspective, and also bringing investment nearer to people, irrespective of where you are. We have the Easy Portal system, which enables access to the system and to be able to buy shares irrespective of where you are. And this speaks also greatly to encouraging the entire discussion and the issuers in promotion of ESG. So I'd say as the exchange, we've made very great strides, and we continue to promote the discussion on ESG. And even for the companies that are not listed and maybe do not have either the sufficient cash flows to get listed, we have still a program on USE, the USE dollar, which also provides opportunities for companies and also supports even such initiatives. We see a number of startups which are actually quite ESG sensitive, may not be able to list, but we provide still that. So that's still giving back to the community, giving back to the society, but also improving and giving that guidance on governance from that side.
Okay. Thank you. Thank you very much, Jacinta. It's good to know that the stock exchange is really doing something. And I liked the education piece. Sarah, thank you for what you're doing in that area. And I hope that all of us will be in the November masterclass from 20th to 22nd. So well done. If you want to sign up for the November masterclass, Sarah will be at the back at the end of the of the session, and you can definitely sign up for that. The stock exchange mentioned something about reporting, how they've made a lot of strides, and how annual reports of listed companies are now including this area of sustainability, and that it's quite impressive. I'm happy that we have Mr. Semakula. I'd like him to tell us a little bit about the reporting, sustainability reporting by Stanbic Bank.
Okay, so I think if in 2021, one of the investments that Stanbic Uganda made was the setting up of a sustainability unit within the organization. So this is not, it's not a role that's run, let's say, time for annual report, and someone in finance picks up a few statistics and compares the report. No, it's a dedicated team that helps to embed sustainability across the organization, throughout the year, in terms of delivering training, coming up with KPIs for the different business units, and that has embedded sustainability throughout the organization. So from 2021, in 2022, the board of directors approved the sustainability framework for the organization. And since then, we have run 2 full reports in 2022 and 2023 on our report to society. An abridged version of that is included in the annual report that we publish on our website, but also the detailed report to society in itself is available. So I think that's the first major investment that was undertaken to drive the sustainability agenda. So I think, like Jacinta said, and we can see it's still a journey. Listed companies in the region are still learning. Some of these standards have just been, sort of passed down, from other markets, and it's a journey. But I think what matters is that companies get onto that journey, and regulators are helping with delivering the training, the regulatory environment to embed reporting into our regular reports. So I think for us, it's critical that we are transparent with the results of our operations outside of the financial metrics, because the public, our clients, and all stakeholders need to know how we are doing based on the commitments we have made from a sustainability and ESG point of view. I think, given that we're a listed company, it's critical that even our shareholders know, the company they are invested in, how sustainable are we. Of course, apart from the financial returns that they're seeking for, investors are increasingly interested in the sustainability leg of operations. So that's been the history of Stanbic so far. I'm proud to announce, for anyone who doesn't know, that at least for 2023, Stanbic Uganda won 2 awards at the PRAO and the FIRE Awards for the best sustainability report and the best integrated report. So again, it's still a journey, but I think some meaningful progress has been made. Thank you.
Okay. Thank you very much, Mr. Semakula. I think I'll ask them to clap for Stanbic. Huh? They should. They should, yeah. It's really good when we walk the talk. Sustainability can be just, a buzzword, or it can be something that's actually done practically, society, and helps us to save the environment. So I'm very happy when I get the kind of feedback that you're giving us. And I think the challenge for everyone out here is to go and look at the sustainability reports that Stanbic has been issuing and that have actually helped them to win some awards, and just see how they are reporting in this particular area. Cynthia, when it comes to investors have a role to play when it comes to sustainable financing. And I would like you to just help us appreciate, from a regulator's perspective, what role you feel investors actually play in this space, and how are investors actually protected?
Okay, first I'll start with how we protect investors. Number one, we develop the framework within which the market players operate. This is through issuance of guidelines, policies, and regulations. Secondly, we also play an oversight role to ensure that these players are able to meet the standards that have been set or comply with these standards. And most importantly, we also play an enforcement role, that in the event that the players do not meet the standards, then we are able to come and enforce through prosecution, through issuance of fines and penalties, among other things. Now, when it comes to the role that investors play, they do play a very important role. One, they are policy advocates. I think my fellow panelist has just mentioned that they're already on the sustainability path. They're already reporting on it. And so through this, they come and engage constructively with regulators and policymakers to develop tools, frameworks, and policies which are able to integrate sustainability finance. Secondly, and importantly, they also directly or indirectly invest in projects that have sustainability components in them. And also, thirdly, they make deliberate efforts to ensure that the companies in which they invest or through which they invest are able to improve their ESG performance through shareholder activism and dialogue. I think I'll also want to highlight the gap that is existing in this space, especially when it comes to retail investors. And my call upon retail investors to get on board and also be able to play a part in this shareholder activism, in advocacy, and also investing more and also seeking more information when it comes to sustainable finance. Thank you, Miriam.
Thank you very much, Cynthia. I think the retail investors have heard that they also have a part to play when it comes to issues of sustainability. Mr. Mubale, I'd like you to just help us to appreciate. We've been talking about walking the talk. We've got some very good examples of what Stanbic Bank has been doing in this area. But as an asset manager, how do you actually embed sustainability in your investment process? Just help us appreciate that.
Yes, so I'm not certain how other firms might be embedding sustainability into the investment process, but I can confirm that at Sanlam, it's a very big component. And how we do it is for every investment that we make, we do a little bit of groundwork, come up with some type of models and projections on each investment. We then go ahead to score each of the investments on the aspect of its strength as a business, but also on the aspects of sustainability. And in the combined score, when we are doing that work, the sustainability factors contribute 25% of the overall score. So you can still have a very good business, but if it scores poorly on sustainability and other issues, then in terms of hierarchy, it sort of goes down. Now, as you're aware, each business is sort of different, so the scoring is not consistent across different sectors, but within the sector, there is some level of consistency. If you are in the bank side, I think things like water usage is not as high as maybe energy or can I call it predatory lending? If your lending rates are very high, then we will probably prefer somebody who's not preying onto their customers. If you're into manufacturing or breweries or soft drinks, then water scores takes up a much higher score than maybe other factors. And of course, in the telecoms, energy usage is quite up there, and the cost of products. So we've developed these kind of systematic ways of not only measuring the performance and projections of the business, but also how they perform in terms of their sustainability. You will have noticed that quite a number of listed companies have started issuing sustainability reports. We update our models regularly based off the cycle on which the investee is delivering information. Some are doing half yearly, some are trying to be as aggressive as on a quarterly basis. And in that information, we also then track the sustainability factors one by one. So if your objective is zero emissions by 2030, we then track how consistently you are moving towards that goal. And if you slacken off a bit, we then raise our hand and say, but you've fallen behind on this issue. What exactly happened and how are you going to rectify that? So from an investment process perspective, that's how we are approaching embedding sustainability into how we make investments. Thank you.
Oh, thank you. That's very interesting. So we're not just looking at the bottom line. We are now going beyond profitability and going beyond what the shareholders are after to also look at other aspects and other stakeholders like the society. So thank you very much, Mr. Mubale. That was very interesting. The time has now come for this wonderful panel to respond to some questions. So if you have a question, this is your time. Please let us know your name and let us be brief. Let's be mindful of the time. Just go straight to your question, please.
I see there are some questions in the audience. Just before the questions come, ladies and gentlemen, live on YouTube, the CMA Uganda page and the USE page, just tell that person who may be in office that we are live and we're talking about sustainability. And it's a very, very good panel here. Live on the CMA page, the USE page, and the Smart YouTube page. I will ask, oh yes, just that code there is where you'll be able to see all the photos of the event, just in case you may be interested. So feel free to scan it, and then you'll be able to get the photos of the event. Feel free to post them on your social media platforms. Remember to tag World Investor Week and the CMA page as well as the USC page on LinkedIn and on our Twitter pages or X pages. Yes, the question, Cindy.
Thank you so much. Cindy from ICA Asset Management. So the first question is, what kind of returns do you expect from ESG-driven investments? Do you think they're going to outperform the traditional assets? Then number two is, how are you having those difficult conversations with the shareholders where you have to find the company sacrificing their returns in order to drive ESG to get to a certain level before the real returns now start to come in? That's just two questions I have for now.
Good afternoon. My name is Jeremiah. I come from a credit rating company called ICRA. I'm the legal there. I have two questions. I have heard a lot from the panel about the regulations and the law around sustainable finance. And my understanding is that the law offers a basic or a best application of the same. How is the regulator or how are companies like SBG measuring this matrix? Yes, that's my question. Thank you.
Hello. Degratius Wamala, I wanted to ask, tell me about how greenwashing manifests in capital markets, and have you encountered any of the last one would be, tell me about the green bonds and our journey to this. How can we reach there?
Okay. So I'm Bob Musenguzi from the exchange. I think mine goes to the GM of Sanlam. ESG and sustainability and the index they used score, I think an argument has been put that maybe this was, in quotes, a gimmick for maybe companies that are not environment friendly to try and sanitize their work. Because when you look at some of the indices they use, you find what you'd say environmentally harmful entities outscoring actually what you'd call green enterprise. So really, is ESG the way to go, or can we look at other things to measure that?
Okay. Thank you very much for these very interesting questions that you have raised. The first question, what kind of returns do you expect from ESG? I'm going to leave this to the people who are not learned on the panel.
I think this question was for Mr. Mubale, but now look, I think first and foremost, every investor is different. There are investors who, when they look at their unique circumstances, ESG is important to them, and even if it comes at the cost of sacrificing returns, they're happy to take that. So of course we can't really give a number because every investment is different and it's relative, but I think we also must recognize that certain investors, for example, will not want to invest to have exposure to industries that are linked to pollution, waste disposal into rivers, etc. And even if instead of taking an investment where they were earning, let's say 15%, the more sustainable option is lower, maybe 12%. I think that's very common. So I think it's important, but it really depends on the circumstances of an investor and when they define their unique circumstances. If the aspect of sustainability is critical to them, they will be willing to sacrifice returns. Yeah. But maybe Dennis can supplement.
Okay, Dennis, as you supplement, could you just also cover Cindy's question when it comes to shareholders? How do you have those conversations with shareholders who may feel like you're sacrificing profitability to get into issues of sustainability?
Thank you. So, at least from where we stand, we find that the investment made into sustainable or sustainability factors is worthwhile overall. And from a return on investment, I think that varies, as Grace has mentioned. And the best way to measure that is in terms of benchmarks, in terms of comparability. I can give a quick example. If you're looking at banks, say within East Africa, you will find that the banks that score highly on sustainable factors are also generating a higher return for the shareholders. That is not a theory, that is what we've actually evidenced. So by the time we come to emphasize that I think this is important, it is not based off it could happen, it has actually happened. So it's a worthwhile investment. So as shareholders, we are happy that yes, we would look like we are sacrificing a bit of cost, but eventually it pays off. And secondly, like I mentioned, we are happier with with institutions that are well governed, because we have less to worry about. Okay? Yeah. There's less to worry about. So we have more confidence when there's better governance, there's better environmental management, because we feel the reputation of the institution will be much better over time. So it's a worthwhile investment that then ends up also paying actual dividends. Yeah.
All right, Cynthia, as we respond to these last questions, I'll also like you to just give us your parting shots so that we can round up this session. Deogratius asked about this beautiful journey we are going to take towards green bonds. How are we going on that journey? Just explain that a little bit and also give us your parting shots.
Thank you. So when it comes to green bonds, we are currently amending our Oath of Securities regulations, and we have provided requirements and the framework for which to apply and also be able to issue green bonds. My parting shot really is a call on us in the financial services ecosystem and also outside to be good stewards of the environment in which we live, to be socially aware of the things that we can do that affect the society within which to live, and also just highlight that there are various risks for not adhering to sustainability in general, that the physical risks can include floods that we've recently seen awash in the entire region. We've also seen the unfortunate Kitezi event. That is how far our actions lead or affect the environment within which we live. For issuers, market intermediaries, the exchanges, investors, both retail and institutional, we do have a role to play, and we should all be able to play it to see a better environment in the future for us and our children. Thank you.
Thank you very much, Cynthia. Let's give her a big hand clap. Jacinta, there was a question around greenwashing and how it actually manifests. If you could just speak about that. And there was another question on some of the metrics that are being used when it comes to some of these measurements, because the regulation is a bit basic. If you can also just make a quick comment on that and you give us your parting shots.
Okay, I'll start with your last question on the matrices that are being used. I think a lot of guidance is being derived from the IFRS S1 and S2 standards. These give significant guidance, and I would just maybe invite, I don't remember the person who asked the question, invite you all actually to read through those a bit more detailed, but I would give significant guidance. But also I think Bank of Uganda released some ESG guidelines for the banking sector, and these can give significant guidance. I think even ICPAU has some voluntary guidelines on the ESG perspectives and the matrices, so that would be a starting point as well. As Grace said, it's a journey. We're on the way there. Yeah. To the second question, I don't remember the gentleman's name on greenwashing. So simply put, it's releasing, should I say concealing or misleading information on the actual performance of a company from the ESG perspective. Companies going in this direction, it already goes to show that ESG has become a significant discussion. Maybe to put it into perspective, I don't know if anyone remembers the, I think 2015 or 2016 Volkswagen scandal. It was a very significant corporate governance scandal where the producers of this, in this company, released a particular vehicle to the public, and they sort of manipulated the software in the vehicle, and it was presented to the public significantly lower carbon emission. And of course, this speaks to investors as well, because now you're seeing companies do not want to go through, of course, there's a financial impact on it. And so the IT systems were manipulated. I'll not go into the detail. And people bought onto this with that in hindsight, that this is actually protected. It caused a very big scandal, corporate governance wide, but also, and actually a number of these vehicles were recalled. It caused a lot of backlash, reputational risk, and all that. But what is that? Because there is clearly a need to promote ESG, and it's actually interesting to the public, but the expense and all that. So that's just an example of misleading information and its impact, and which would be, in essence, greenwashing.
Thank you so much. Mr. Mobale, if we could have your parting shots.
Yes, there was also a question around scores.
Okay.
From our perspective, we have our own scoring process because we have capacity internally, and of course it changes as we investigate or for whatever reason, but it is owned by us. And the scenario you pointed out, at least we haven't seen it. Okay, so in terms of parting shots, I think for the future we see questions being asked of fund managers as stewards of capital to do more. And in Uganda, we should expect a couple of regulations. So for our customers, they'll be seeing a change in the way we report to them. And part of the work that we're doing in the background will start to come to be at the forefront, presented to them that this is how we are managing this whole sustainability issue. So from a forward-looking perspective, that is something that is coming, not just within Uganda, but across most of the managers that we've had conversations with in Africa. I think South Africa is ahead, but then the rest are also catching up. So it's a big issue, and we should embrace it.
Okay, let's give him a big hand clap. Last but not least, Mr. Semapula, your parting shots.
So I think mine will be about market development. I'm hopeful that we can leverage the options available in this space to widen the range of financial instruments that we have in the market. So I think the issuance of green bonds is, in particular, is a key area that could, support a lot of activity on the market and diversifying away from the existing suite of instruments. So that's an area that, as a franchise and investment advisor, we are very keen to support and to see how the market evolves. Of course, as Stanbic Bank, we've already sort of been issuing green loans, to companies that qualify in that space. But we're excited about, how the market can be transformed with this range of securities. So, in case anybody, thank you.
Thank you. Thank you very much. Let's give the panelists a big hand clap. I think we're going to take a photo. We deserve a photo.
You do.
Okay.
Yes.
So let's stand up and take a picture. Thank you.
You'll take a photo up, down. Just come down. I think it will have a better background. The cameraman. Okay. While they have a photo moment, ladies and gentlemen, like I said earlier, we are live on YouTube, on the CMA page, USE page, as well as the Smart 24 page. I wanted to guarantee you, ladies and gentlemen, that please don't leave your seats. We will be out of here by 4:30, so please do not leave your seats. Allow me to appreciate organizers of this event. That has the Capital Markets Authority that has partnered with the Uganda Securities Exchange to ensure this event is a colorful one. But also allow me to recognize the sponsors of this event: Stanbic Bank Uganda, Vision Group, Smart 24, MTN, Umeme. Hand clap, ladies and gentlemen. Umeme, Deposit Protection Fund, ICA, Old Mutual, DFF, Level Africa, Britam, Bank of Uganda, Gen Africa, NIC Holdings, NSSF, Presidential CEO Forum, and Bank of Baroda. Ladies and gentlemen, just a hand clap for them, because without them, we wouldn't have had such a very colorful event. Please, another hand clap for our panelists, the land persons, and the gentleman that escorted them. We appreciate them for this event, for the engagement. Ladies and gentlemen, allow me to just ask you, please stand. Please stand for a health break. Stretch out. I see some of you are beginning to close those eyes, or the eyes were just dropping, but okay. Stretch, just stretch a bit, and we'll just do a very, very simple activity. The theme for this year for World Investor Week, ladies and gentlemen, I see someone, is that Damali sitting? Please stand, yes. The theme for this week has been tech-enabled financial inclusion, bringing sustainable finance and investment opportunities to everyone. So your role is to remember bringing sustainable finance and investment opportunities to everyone, okay? When I say tech-enabled financial inclusion, you say bringing sustainable finance and investment opportunities to everyone. Tech-enabled financial inclusion? One more time, tech-enabled financial inclusion.
Bringing sustainable finance and investment opportunities to everyone.
Thank you very, very much. You may have your seats. While we invite the next panel of this of experts, the gentleman, yes, please feel free to get the photos for those who are still asking for them. Okay, feel free to get the photos and scan the QR code. For the next session, we're going to be talking about the role of government in advancing financial inclusion, sustainable finance, and capital markets investments for national development. Is it me or the mic? It's the mic. Oh, it's me, eh? Okay, thank you very much. Okay. I hope I'm audible now. So we'll be talking about government's role, ensure financial inclusion, and very good panel that has been organized, and it's going to be a very, very interactive session. So to be able to moderate this panel is I think I'm the problem. Please bear with me. Is a gentleman who we've known, I think we've seen on TV for a long time. He is the public and corporate affairs manager at an organization that powers Uganda. He was previously serving with the Kampala Capital City Authority. And he's a member of the Public Relations Association of Uganda and part of a École National College. He speaks French clearly. And also, he has done some work with the British Council. Please allow me, ladies and gentlemen, to invite Mr. Peter Kauju to be able to moderate the next session. Peter? Another hand of applause, please.
Thank you very much, our Director of Programs today. When you say you have seen me on TV for a long time, I hope you're not calling on me to retire, you know? Good afternoon, everybody. I'm very pleased to be here with you, and thank you for investing your time to be here to learn and to network and share a lot that we have shared today since morning. Indeed, Grace Semakula said every investor is different, but I think for all of you who are here, we are the same. We're investing because we want to be better in everything that we do today. So this afternoon, we are looking at the critical role of government and its institutions in advancing financial inclusion, sustainable finance, and capital markets investment for national development. So I really want to thank you for making the time to be with us here. So I have very distinguished gentlemen this afternoon today. So we will have Mr. Sembia Dixon, who is currently the Director for Research and Market Development at the Capital Markets Authority. He holds a Bachelor of Commerce degree and an MBA in Finance from Kenyatta University. He's a CFA, a charter holder, and he has over 14 years experience in capital markets as a regulator. 17 years now. Thank you, Dixon. We welcome you. Let's welcome him, ladies and gentlemen. Our other panelist today is CPA Andrew Kawere. Is a banking professional with extensive experience in finance, audit, and financial sector regulation. He's obtained from diverse sectors, both public and private sector. Andrew started his career, which now spans over 20 years, with a stint in public practice at KPMG. He later on moved on to the East African Development Bank and Bank of Uganda, where he has served in different roles over the years, growing through the ranks to acting head of department at the Central Bank. Until December 2020, Andrew oversaw the regulation and supervision of non-bank financial institutions in the Bank of Uganda Supervision Directorate. Effective January 2021, Andrew serves in the National Payment Systems of Bank of Uganda, where he's tasked with implementation of the National Payment Systems Act 2022 and the regulations thereunder. He has a very rich profile, but allow me to stop at that for purposes of time. Let's give him a big round of applause. My third panelist this afternoon is, sorry, just pardon me a little bit. Dixon, okay. Please help me with, I need to get the last one. Technology seems to be dodgy. Okay. Yes, this was a trick, because this gentleman takes care of our money. Most of us that save with NSSF. So please allow me invite Mr. Owera Kenneth, who is a Senior Portfolio Manager, Equities at NSSF Uganda. Kenneth has over 10 years of experience in investment management. He currently, as I said, serves as the Acting Chief Investment Officer of the fund, overseeing investment strategies and portfolio management. Before joining the fund, Kenneth has held several senior roles in many entities, and we are very happy to have you here, Ken, with us today. And thank you for taking care of our money. I want to confirm that I received the message of 11.5 and so many of them. Shall we clap for that, ladies and gentlemen? Okay. So I want to welcome you here today and thank our organizers, Capital Markets Authority and the Uganda Securities Exchange, for giving us the opportunity to be with you here today. So we are looking at how government institutions are actually working to advance financial inclusion, sustainable finance, and capital markets investment for national development. We've talked about sustainability and ESG, but we cannot sustain, our people if we actually leaving some people behind. So a very quick search in terms of what financial inclusion is this afternoon. I'll just quickly do that, then invite CMA, Capital Markets Authority, to share with us what's happening in their space. So financial inclusion is the availability and equality of opportunities to access financial services. It also refers to processes by which individuals and businesses can access appropriate, affordable, and timely financial products and services, which may include banking, loans, equity, and insurance products. So I will go to Capital Markets Authority. I know a lot has been shared here, and earlier on, our minister indicated that we are going to, in NDP4, we're actually capitalizing in mobilizing domestic savings for investment. How is it running in your spaces from where you sit? I know we have heard already from the CEO, but would like to hear from you what efforts you're putting in to ensure that there is actually financial inclusion. Thank you.
Okay. Thank you very much, Peter. Good afternoon, everyone. I'm very delighted to see all of you, and you know, I know afternoon sessions are usually not very easy, especially on a Friday evening. So again, I mean, I'm happy to see that you're still here. Now, on what steps we are taking in as far as financial inclusion is concerned, you'll allow me to be a bit dodgy before I get to that specific question. Number one, what we believe is that a robust regulatory framework is critical for financial inclusion. Okay, I think when people are confident that they're protected, okay, when people have trust in products, when people have trust in those who provide the different financial innovations, okay, then they're likely to participate or they're likely to get a financial product. Okay, so the regulatory framework is really, really critical in as far as financial inclusion is concerned. And on our part, we're ensuring that we have a facilitative regulatory framework as a way of increasing access, or as a way of increasing financial inclusion. Secondly, income. Okay, income is a critical component of financial inclusion. Okay, I think you cannot interact with the financial system unless you have an income. Okay, I mean, you're not going to interact with the banking system, you're not going to interact with insurance, capital markets. You need an income. Okay, and so from our perspective, how will this work? Capital is critical for businesses, and once businesses have access to capital, then they will expand, okay, and they're going to employ other people. And once you are employed, okay, then you will have an income, and you will have a saving, or you'll have savings that you can then deploy, or that will enable you to interact with the financial system. So from our perspective, that is how we approach financial inclusion, okay? From the regulatory, we have a very extensive public education program aimed at increasing awareness of, you know, matters capital markets. I think this particular week is part of that public education program. Okay, so we use different tools, okay, from in-person presentation, mass media, radio, TV, online and virtual means, and we also have external contractors or resource persons who are part of our financial inclusion effort. Okay, and so we have external contractors who move about the entire country sensitizing people on how to save and invest in capital markets. I think, I hope that addresses the question.
Yeah, thank you very much for that. I will move on to NSSF. How does it look in your spaces as you work out all these initiatives and numbers? I know you're very strong on ESG. Where does financial inclusion?
Everyone, I would like to start by firstly commending USC and the CMA for this initiative of just marshalling all the market players together, you know, to celebrate this week. I think it is something that must be celebrated, and it is a good start. I think going forward, we need to even see increased participation by the different players in the market. Now, to the question specifically, NSSF's core mandate is social security, and this is broken down to three components. One is collections or contributions. The second is investment. And lastly is the benefit payout. And at every stage, there is financial inclusion that we consider. Just to give you a brief about the fund, NSSF has a membership of 2 million people, and those with balances in the fund is about 1.6 million. When you look at the active membership, that is those who are making contributions every month, the number drops to about 800,000. If you're to compare that with the taxpayers in the country, you realize that the numbers are about the same, because URA will tell you that the country has about 1.6 million taxpayers, which is almost the same number as the NSSF has in terms of members with balances. So what does this basically tell you? It tells you that these two entities are largely serving the same group of people. And from our analysis, we realize that this is the formal sector. Now, when you talk about financial inclusion, you find that the core membership of NSSF actually is a very small group of the country's population, with the majority being excluded from a social security perspective. So recently we had the census numbers being released, and UBOS told us that the working population of the country is at about 25 million Ugandans. This is out of a population of 48 million people. So effectively, just over 50% is employed. If you're to compare this to the NSSF membership currently, then you realize that I think there is a lot of room for improvement. Actually, a lot of room for improvement by the NSSF. Fortunately for us, the law recently was amended, which moved from only allowing us to look for employers with 5 employees at a minimum to basically every Ugandan being open to social security by the NSSF. And so that has presented us with an enormous opportunity. Obviously, one would imagine that the infrastructure that the NSSF has is geared towards dealing with the formal sector. So if you're talking about the informal sector, then there is a need to relook at your infrastructure. There's a need to relook at your approach to the market, which is something that the fund is working on. And one of the core tenets of that, just to ensure financial inclusion, has been the aspect of financial literacy by the NSSF. Then it is very important that the aspect of financial literacy is enhanced, and that is something that the fund has been focused on largely. I think I'll leave it there for now, and then.
Thank you. Before you get off the mic, you've shared very well, especially on the numbers, and we have had a lot of presentations here. Yes, about 45 million Ugandans, and they are saying about 21, almost 2 million unbanked. We are in a techie-savvy world now. People are embracing technology to ensure that we can reach out those that we have not reached previously. How are you utilizing, technology to ensure that all the other Ugandans get actually an opportunity? They may not be in formal employment, as you indicated, but how do we reach them to ensure that we bring them on board as NSSF? Thank you.
Okay, thank you very much for that question, Peter. I think it is very important that every Ugandan is covered when it comes to social security and effectively financial safety. Indeed, you have rightfully pointed out that when you look at the banked population vis-a-vis the overall population of the country, there is a large portion of the population that is uncovered for financial inclusion. And indeed, when you look at the development or the advent of the telecom sector, you get to realize that the reach or the inclusivity has been faster than the banking sector, but also in terms of depth of penetration, it has been higher. I think when you look at just phone penetration, we are looking at about 68%, which is about 68 out of every 100 Ugandans having a phone. That is already, an avenue, and that is something that the NSSF has increasingly been using to tap into that aspect of the population. I think when you talk about coverage, which is one of our core mandates, we are trying to make it as easy as possible for current members, but also prospective members to be able to save with the NSSF. And for that, you need to be able to find those people wherever they are. As I said, if you're talking about the formal sector, it is quite easy to reach those people because you know the address of someone, you know the address of the employer, and therefore, all you need to do is visit the employer if the employer isn't remitting their benefits. But when you come to the informal sector, then you need to change your approach, and that is something that NSSF has been doing. So in addition to our financial literacy efforts, we're also using the phones, the mobile phones, to enroll as many members as possible. We have partnered with the telecom companies, MTN and Airtel, to ensure that we can be able to reach as many members as possible, sign them up for the services, and ensure that they can be able to contribute with the NSSF. I think something else that is also very important to consider is the smartphone penetration. That number is at about 40 to 45%. Fortunately, it is growing. The telcos have various initiatives to try and ensure that that can be deepened. And the reason for that is because then as NSSF we can be able to enhance the available opportunities that members can benefit from. There is a lot more that you can do with the smartphones than with the feature phones, for example. However, that being said, we still have to ensure that we use that avenue to reach as many members as possible, to enable them have ease in signing up, to enable them track their investments, and also to ensure that when it comes to payment, which is very important, that a certain category of our members can actually initiate their payments on their mobile phones in the comfort of their homes or offices or wherever they might be at that point in time. Thank you.
Thank you very much. Mr. Kawere, thank you for all you're doing at the bank. I mean, we see the monetary indicators in the papers most of the time. We see the green trucks, moving, carrying money. We keep admiring. And how, from where you sit, how are you supporting this drive and the efforts to ensure that there is actually financial inclusion for a Ugandan down there in my village in Kamonkoli and Kamwenge? Thank you.
Thank you very much. Before I start, may I also join my colleagues to thank the CMA and the USE for organizing this forum. I think it's a worthwhile conversation. In terms of the central bank, central banks are primarily known for monetary policy, financial stability, and things of the like. But monetary policy cannot be effective if you have a huge population outside the formal financial sector. So 2 years ago, the central bank revised its mission to add a component of socio-economic transformation. So the mission of the central bank today is to foster price stability and to promote price stability and a sound financial system in support of socio-economic transformation. Why am I highlighting that? I'm highlighting that because we do understand that we cannot achieve price stability, we cannot achieve the monetary policy objectives without a formally sizable population being part of the economic system. So financial inclusion is a core part of the central bank, particularly arising from that extended mission statement. And a lot is happening within the central bank corridors to promote financial inclusion. But maybe what I can highlight is that the central bank is actually the secretariat for the national financial inclusion strategy, which is the government, policy document that embodies the national aspirations around financial inclusion. We're currently running with a second strategy, which was launched in September last year. And therein, there are so many initiatives that are being implemented, not only by the central bank, but in partnership with several government departments, in partnership with several private sector players, the development community, and so many other players. Before I go into those initiatives, let me also highlight where we've come from. Last year again, a FinScope survey was published, and it gave some very, very interesting statistics on financial inclusion. If you take overall financial inclusion in Uganda, FinScope, the 2023 survey, put overall financial inclusion at 81%, meaning that 81% of Ugandans have access to financial services, but that includes the formal and the informal. Formal services are those delivered by regulated financial institutions. However, we have a lot of interest in the formal services for the reasons that many colleagues have discussed, including the preceding panel. The informal services are not regulated, and that component remains quite sizable. But the formal access, formal financial inclusion access, was put at 68%. That is for banks, microfinance institutions, mobile money service providers, and similar institutions at 68%. But the 68% is not good enough. So the national aspiration, as laid out in the financial inclusion strategy, is to raise that to at least 75% in the next 5 years. And to that extent, the central bank is doing so much together with different partners. For example, again, arising from the same FinScope statistics, it was found that the 80% is largely on account of digital financial services. So a lot of energy is being expended towards promoting digital financial access, including mobile money, for example, and the associated oversight processes. There is a lot of work going into, including with CMA and the USE. There is ongoing work around using funds to deal in government treasuries and other securities. There is a lot of work going on around competition, because like here, my colleague has mentioned, without trust, without building trust in the access to financial services, we cannot scale up the access. So the central bank is doing quite some work around consumer protection. We're doing some work around fair competition, for which we've hit some bureaucracy or bureaucratic roadblocks. But the interventions are generally geared around scaling up formal access from the 68% in FinScope, empowering the consumers further, because we've also realized that one of the barriers is around the low levels of digital literacy, and yet digital channels are a key enabler. So we are devoting energy around empowering the people with digital literacy, and we've worked with the NSSF, for example, on that. And of course, strengthening the catalytic role. The central bank, like I said, has moved away from just doing the regulatory side, but we are also pushing a catalytic mandate to catalyze the sector through the push of incentives for access to financial services. So at high level, those are some of the ongoing initiatives. Yeah.
Thank you, Andrew. I think it was Sanlam that mentioned earlier about some predatory financial practices. Do you find this a challenge from where you sit with your lenses? Do you think it would be one of those factors that could be hampering financial inclusion to some extent, that some people fear to go to the market because of maybe very prohibitive rates and things like that?
Absolutely. It is a big challenge. It is one of the pains that we're dealing with. And the predatory practices, you've highlighted one angle, which is maybe unethical lending and the unethical recovery practices. You might have seen some reports in the press recently, but that is just one side. We've got the other side around things like charges, transaction charges that are, unjustified. We've got the angle of degraded services, and I will use a basic example. If I went to a bank or if I went to an institution and placed an order for a payment transaction using a channel that is expected to be instant, say RTGS, but then that institution takes time to process that transaction, that is still predatory, especially if the customer is not fully informed of what to expect of the service. So, yes, there are challenges around unethical financial practices. And what we've done as a central bank is to, at our level, within our confines, we've issued consumer protection regulations for digital financial services. We've tried to strengthen the consumer protection arm for the conventional deposit-taking institutions. When you go to a bank, you'll find things called key facts documents to try and empower the customer so that they can ask, relevant questions to the financial services provider before they sign up to a financial product. So that is some kind of empowerment for the financial services consumer, so that they can ask the right questions, so that they can put the institutions to task in as far as terms and conditions of service are concerned. But we're also collaborating with other partners. The case in point is the digital lenders who are under the supervisory oversight of the Uganda Microfinance Regulatory Authority. You must have seen those press reports where people were complaining, these people are extorting, they are confiscating our IDs and things like that. So we've worked with the Uganda Microfinance Regulatory Authority and found a mechanism of, getting those dealing in such unethical practices. So the point is, it's a vice within the sector which the central bank is addressing on its own for the institutions that are under our mandate, but we are also trying to collaborate with our sister regulators for the institutions that are cutting across, for incidents that cut across the regulatory boundaries, such as the case for money lenders. Yeah.
Thank you very much, Andrew. I'll come back to Dixon here. And thank you for bringing us together today and hosting us. All these point to a lot of initiatives that you're undertaking as CMA and USE to create awareness. But again, this morning, the Minister emphasized that we are going to rely more on innovation in terms of mobilizing domestic resources. So what are your areas of focus? If I would ask you to point to some initiatives, about 3 or 4, that we are going to capitalize on in this financial year as we carry forward in line with the government's agenda of mobilization of savings and investments.
Okay, thank you. I think, like Adali indicated, the regulatory framework is critical in ensuring that you have an empowered, you have protected investing public. Okay, so they'll come into the financial system. So regulatory reforms will be a critical component. Public education. Okay, I think knowledge about the options. Knowledge on what to do, what not to do. I think that's a major focus area. And I must admit, yes, we've undertaken activities around trying to create awareness, but I believe there is still a lot of work to be done. Looking at the levels of awareness, so there's going to be enhanced public education. Okay, and of course, once people are armed with the knowledge, once people have the information, then they'll be a lot more confident to interact with the financial system. I think earlier on there was mention of by my CEO. She talked about the regulatory sandbox. as a key tool. Okay, and again, this particular tool will not only facilitate innovation, okay, but it will also facilitate regulation. Okay, so there are two aspects here. From a regulatory perspective, you get to understand what, how, and what to regulate, and then from a perspective of innovation, you're actually able to allow innovators to, pilot, test different innovations. And of course, innovation is a critical component in financial inclusion. People want convenience. People want things that are done differently. Okay, people want efficiency. People want lower costs. Okay, and all that, that the lower costs, the efficiency, being able to access your money on mobile phone, being able to invest through mobile phone, all that will come through innovation. Okay, so innovation will be a key component or a key building block of our strategy in as far as trying to ensure that there's a lot more awareness, there's a lot more financial inclusion, which is critical to mobilizing the savings that will then go ahead to drive the necessary economic growth by providing capital.
Thank you very much. Dixon, I think I'll move back to the audience to see if there are any questions. I want to confess that I think, as they have indicated, numbers actually do not lie. They have said the biggest percentage of our population are actually young people. They are youthful people. So in everything that we do, we need to target them. I'm a beneficiary of Capital Markets Authority and USE. While I was starting as a young journalist at New Vision, I got an award many years ago, and yes, the award that I got actually had money, and it was tied. You actually had to choose a company, any listed company where you would buy shares. So they bought me shares in Stanbic and UCL, Uganda Craze, so I have never regretted. So to the youngsters out there, there is real opportunity out there. So I think I'll give opportunity to about 2 people to ask this gentleman here. Please don't complain about the panel. We saw quite a number of ladies on the previous panel, so we needed to balance the boat, yeah? And that was Josephine's plan. So let's have some 2 or 3 questions, and the gentleman this side will be able to respond.
Thank you very much. My first question is to all the gentlemen, including the gentleman from Umeme. What deliberate actions are you taking on issues to do with internet affordability, and whether you give it to us free of charge? I know NSSF is very good at mobilizing resources. We're all talking about cases where we want everyone to know a lot about technology, financial inclusion, technology, but the internet is quite expensive. I don't know. There are certain deliberate actions that should be taken for us to be able, as Ugandans in all parts of Uganda, to make sure that internet is very affordable. My last question is to the gentleman from BOU. I really appreciate the work and the report you did with WUMRA, especially issues to do with digital lending. But I'd like to report to you that on a personal basis, I've been making a research and I've been collecting evidences of the cases of the harassment and the threats that digital lenders have been giving out. I beg to be protected. If there are people that own those applications in this room, I hope that I will be protected. If anything happens to me, just know they came for me. But
you're protected. It's a free world.
But I just want to say that it keeps getting like worse and worse undercover, and it's very important for you to know how they are able to access your private data, the kind of threats that they keep giving to people. I've evidences, and I've also gone ahead to share emails with WUMRA to tell them the kind of category and the information they give out there. So I really think issues to do with digital lending, there has to be a lot of restructuring so that people can be able to work professionally, so that people can be able to be like other money lenders, like banks, like someone is not owning like a kidding, but like a million phone calls in just 1 minute, speaking different words, threatening you, trying to be abusive. You've not even expired. So I have had like a couple of cases, and I'm still really gathering information. So if there is anyone in this room and is still experiencing the same, we are gathering information so that we can be able to have a more structured digital lending platform.
Thank you very much. Andrew, I think, has noted that. Could we have one more, if there is? And then, okay, there's a gentleman there. Okay.
Thank you so much. My name is Anthony from Smart24 TV as a journalist. My first question goes to my OB, Mr. Kawere from Chitovu. In 2022, Bank of Uganda issued a statement through a circular from your office that cryptocurrencies had been barred. Cryptocurrency transactions from mobile money to crypto and vice versa had been barred by the institution. Where do you stand currently? Because the crypto market, much as we don't want to admit, is going out of the racks. You know, you're looking at over 2.32 trillion US dollars. I don't think we are better than US. We are better than El Salvador, who have embraced digital currencies, right? So can we leverage them? Where do you stand at the moment in terms of digital currencies and crypto? Then for the rest of the panel, Mr. Dixon and Mr. Wera, when you look at why people don't invest or why people are running away from NSSF, it's because of the perniciously low amounts of income that they have. When you look at a recent statistic, like about 1 year ago, showed that less than 1% of Ugandans earn $1 million. And I can agree, if we are here, we are all here, and probably we are earning above $1 million. You're amongst the 1% of Ugandans. Now, you bring that Ugandan who is earning less than $1 million, and you want to take away NSSF. You also want them to put some money in the collective investment scheme, which is 100,000, by the way, minimum. How are they going to do it? So what option do you have for the low-income earners? Are you going to facilitate them so that they can earn more, or you're going to deal with actually what they have and grow it? Thank you so much.
Thank you very much. Thank you very much. So I'll start with Dixon. Actually, what I'll request is you respond, and then at the end you give your parting shot as well, because I want to give you another chance.
Okay, thank you very much. And thank you for the questions. But I think since I have the microphone, I can also set a couple of my own questions and answer them. I think there was a previous question, and you'll excuse me. There was a previous question on Islamic capital markets. Earlier on, there's a lady from Salam Bank who had asked what efforts are being put in place, or what initiatives are being put in place, to ensure that we have Islamic capital markets products. And I totally understand where she's coming from, because I think as an Islamic bank, they need liquidity management tools that are Sharia compliant, and we are very much alive to that. For the Islamic banking sector to thrive, then you need capital markets based instruments to help them manage their liquidity, but in conformity with Sharia law. So being cognizant of that particular prerequisite, we are currently developing a framework, and in the next 3 to 4 months, we should be having guidelines that will provide a framework for issuance of products and trading of products that are Sharia compliant. So there is some good news, and keep your ears on the ground. That will be coming soon. The question on internet affordability, I need to start with a disclaimer. I am not an engineer, to start with. Then secondly, I wasn't so good at physics. But I was good at other things. I think I was good at commerce, economics. Physics was not my area
And maybe
of
technical drawing. It's okay.
Yes. Now, just trying to look at that particular question. How do we bring the cost of internet down? From a logical perspective, competition can be one way of bringing the cost down. I think if you've been following what Starlink has been doing globally, Starlink has been a disruptive force. Elon Musk and what they call low orbit satellites. I think he has about 8,000 of them. And wherever he has deployed, or wherever Starlink has gone, it's been a disruptive force. And it's actually pulled prices down, okay? Case in point, just across the region, if you hear the stories, I mean, what the incumbents are doing, the incumbents even petitioning Parliament to stop Starlink because of the effect that it's having on the pricing for internet. So competition can be one of opening up or reducing the affordability. Tax incentives, I think there's quite a bit of taxation around internet-based services. So I think if we can find ways of incentivizing, or we can find ways of reducing these taxes, then that should be able to bring the costs down. Then, you see, costs are just a function of your operating environment. Okay, if you can recall the doing business, cost of doing business or doing business index a couple of years back, World Bank report, okay? And it will look at so many functions or so many variables within your environment that affect your cost of doing business, okay? From something as simple as how easy it is for you to access electricity, okay? I remember a couple of years back, before national IDs came into place, okay? Since banks could not trace you very well in the absence of a national ID, they had to factor that risk in the cost of your lending. So the absence of an ID, okay, contributed to high cost of lending, okay? So we need to identify those bottlenecks within the operating environment, okay? And if we're able to unlock those bottlenecks, okay, then that should translate into not only lower cost of internet connectivity, but that should also translate into lower costs in other areas, okay? Lastly, why are people not investing? I mean, to what extent are low incomes a function of the current state of affairs, and what can be done? I totally hear you, and that was my first observation, part of my opening remarks, okay? The fact that, we need to address the income aspect of this, okay? We need, we seem to be so focused on, absorbing or adoption, okay? Without looking at the fact that, for me to adopt these financial products, I need to have an income first, okay? So the question is, what do we do in our current state? I think if you look at the global trends in low-income countries, we've seen innovations that target the bottom of the pyramid, okay? I know, like in insurance, you have what you call microinsurance. You have what are called micro-pensions, okay? And all these are cognizant of the fact that, yes, most of these products would work best, where people have low incomes, but at the same time, you need to tailor them or customize them to your environment, okay? So you need to come up with products that will be able to capture the bottom of the pyramid, okay? The low-income individuals. Now, what are my parting shots? I think in conclusion, first and foremost, allow me to also recognize the effort of my colleagues who put this particular week together. I think we could give them a hand clap. Okay. I think in conclusion, we do appreciate the importance of financial inclusion in as far as mobilizing savings is concerned. Now, I'm being a bit selfish, looking at it from the capital markets perspective. We do appreciate that particular perspective, that capital is formed from your savings, okay? Regardless of how big or how small your savings are, okay? Capital is always formed from there. But again, before you provide that capital, okay, before you interact with the financial system, you need the knowledge, you need the know-how, and you also need to be confident enough that once I've interacted with this system, I'll get the best deal, okay? I think the likes of Kenneth talk about best execution, okay? I'll be able to get the best execution in as far as service is concerned at the lowest of prices and in an efficient manner, okay? So as an authority, I think we remain very committed to, furthering that goal of financial inclusion through a public education campaign in order to mobilize the savings that will eventually find their way or will be tapped by businesses as long-term capital. I thank you.
Thank you, Dixon. I allowed you more time because you're the one hosting us, but I appreciate. Also to add on what he said, the minister earlier said the focus of government in NDP 4, one of them is sustainability, increasing production, productivity, and value addition in key sectors. He also mentioned about enhancing human capital development, supporting the private sector to drive growth and create jobs. Number 4 was building and maintaining strategic sustainable infrastructure. and strengthening good governance, security, and the role of the state in development. So I hope that partly addresses some of your issues regarding income. Ken, you have 30 seconds to round off this.
Okay, thank you very much. I'll just tie the two questions. I think you are very right that the cost of internet in the country is high. And in lowering it, we can address the issue that he raised about opportunities, employment, and earnings. When you look at the UBOS numbers, it's quite interesting. I saw it before I came in, and I was surprised. You know, 74% of the population is under the age of 30. And effectively, I don't know how many in the room here fall in that category, but that's really the bulk of the country. And when you look at employment stats in that age group, I mean, it must be unemployment stats. It could be probably over 70% as well. And for us to address that, you know, internet costs have to come down. I think I've seen in different, you know, spaces where government is really working hard to invest in the national backbone and lower the cost of internet. So that is something that's very important. Hopefully we see it come down. I think as an investor in the two telcos in the country, it is something that they think about, they discuss, they realize that it is important for their growth as well, and their initiatives going towards seeing that the cost of internet go down, because that segment of their business is growing. Coming to the earnings being very low, I think I want to say that saving is a habit. It really doesn't depend on how much. Rather, it is you developing the habit. And it is very important that as Ugandans, as the 74% we are talking about, that habit gets embedded at a very young age. And that is why the NSSF, in conjunction with the various players in the market, we are trying to drive the financial literacy agenda. Just to say that even if it's 10,000, develop the habit of putting aside 10%, maybe 5%, maybe 15, maybe 20, you know, and then you deal with the rest. But focus on saving. Once we can sort out the saving equation, then the other things come in. Investment, you know, and so on and so forth, where the Bank of Uganda comes in, they'll be very happy. The capital market from a perspective of capital available for investment and so on and so forth. So to your question, I think the habit is very important, but we acknowledge that capacity is critical as well. And as NSSF, we are working on building the capacity of the 70% that UBOS highlighted to be able to save. So we have programs like the High Innovator Program at NSSF, which is into its 5th year of operation. It has been a significant success. We are seeing increasingly small and growing businesses actually, you know, qualifying for larger quantums of capital, which is positive. In the agriculture sector as well, where, you know, we are told the biggest chunk of the population is employed, NSSF is also targeting interventions in that space, and I'm sure in the very near future you will see a lot of initiatives coming up. Thank you.
Thank you, Ken, for being very creative with my time, but that was very important. You've given us that. Andrew, your OB has issues with you that you would need addressed, and then after that you give us your parting shots as well. Thank you.
Okay. Maybe we'll address issues at the Old Boys Reunion. But anyway, the lady who asked about the digital lenders, yes, we are aware, and in the coming week we actually have an engagement with the Personal Data Protection Office, again, to try and find solutions to some of those challenges jointly with UMRA. But also, some of the preliminary investigative works that have been done have indicated that some of the borrowers, okay, because of the point I highlighted earlier, because of the low levels of digital literacy, some of the borrowers sign up certain permissions to the apps, providing access to contacts, providing access to the phone records. And so this, of course, is not an excuse for the lender to call the contacts, but it's a symptom of the bigger challenge that we have before us in as far as digital literacy is concerned. But yes, the concerns are still valid, and the central bank is doing its part within its regulatory boundaries. Cryptocurrency. First, I need to correct something. The central bank did not ban crypto because it's not within its mandate. However, what the central bank did was to caution the public about the dangers associated with crypto. Why? Again, because 50% of our population is digitally challenged. So the central bank, of course, mindful of the bigger consumer protection issues, crypto has no consumer recourse mechanism. The volatility that comes with the cryptocurrency and other virtual assets today, you don't have a recourse mechanism. And in fact, it also poses potential financial integrity challenges which could spill into financial stability concerns. So what the central bank did, in line with government, by the way, this started with the Minister of Finance in 2019 issued a caution which was only reinforced by the central bank in 2021. The caution was that to protect the users of the digital space, digital financial services, the licensed payment service providers are not permitted to support that conversion. Okay, why? Because the majority of the users are not digitally savvy. They are not tech savvy. They are not able to appreciate the risks that come with crypto. So that's why the central bank took that decision. However, we do know that at peer-to-peer level, like you, my brother, you probably are involved in the transactions because you appreciate the risks. You probably use your bank card or your MasterCard or Visa card and find a way of settling your peer-to-peer transactions. That happens, that is happening for those that are digitally tech-savvy. The parting shots. Thank you. Colleagues, reflecting on the conversations this afternoon and earlier on, we have made some very good strides in the financial inclusion space. But I think we need to pursue this collaborative approach. And if I go back to the theme, tech-enabled financial inclusion, bringing sustainable finance and investment opportunities to everyone, which is the theme for the Investor Week. This is very, very well aligned to the National Financial Inclusion Strategy. I mentioned that we've hit 80% for overall financial inclusion and 68% for formal financial inclusion. But we want to scale that up. In the financial inclusion strategy that we're running, we want to scale up usage and the quality of financial services. But not just that. We want the financial services to be delivered in an affordable, sustainable, and responsible manner. That's why among the target objectives, we have things like green finance, developing a green finance market, where CMA is already doing some work around green bonds and sorts of initiatives, and that speaks to the sustainability agenda. However, like I said, it must be a joint effort for all parties, government and the private sector, together with our development partners. Otherwise, thank you very much for the conversations.
Thank you, the panelists, indeed embracing technology to ensure that we are moving to the next level. From where I work, I think it's very evident at Umeme. We've made sure that we empower you, our customers, that you can actually make whatever decision you want using your phone and in your hands. You want to buy your tokens, you want to plan for your power, and that is getting to you. So please, let's put our hands together for this panel here. And again, I want to thank Capital Markets Authority and USE for bringing these gentlemen to enlighten us. And thank you, our Director of Programs. Over to you. Thank you very much.
Thank you very, very much, Peter. I think they deserve a round of applause. And as well, a photo session. They also deserve a photo, right? You guys are the people who are what? Do they deserve a photo? Yes, please let them come down and... Please. So, as they get their privilege of the photo, ladies and gentlemen, this almost closes this. We'll be out of here in about 10 minutes. Just so that you know, as part of the public education strategy, This has been organized together with the Uganda Securities Exchange, as Dixon has mentioned. But just giving you a recap, on Monday we had a press conference where the journalists were invited to a brief about what's going to happen. Still on Monday we had an Express that had over 2,000 youth online addressing different topics. A hand clap to the innovation and using technology to be able to reach the youth. On Tuesday, we had media round tours across different media houses across the country to be able to reach those underserved communities. On Wednesday, with all due respect to the men, we had the Women in Investment Breakfast, which had about 500 people online and physically present at Protea Hotel Kololo. And then on Thursday, we had a very wonderful session with the university students. About 7 universities were invited to the auditorium, reaching about close to 120 people who were present. And today, we close this session with you. A hand clap to yourselves, ladies and gentlemen. A hand clap to yourselves. Tech-enabled financial inclusion. Okay, let me help you again. Tech-enabled financial inclusion, bringing sustainable finance and investment opportunities to everyone. Tech-enabled financial inclusion. Ladies and gentlemen, allow me to invite, in his capacity as the director on the board of the Capital Markets Authority, Mr. Arnold Baguwaje, to give closing remarks. Mr. Arnold Baguwaje, you're welcome. A hand clap for him. Please stand. Just imagine you're inviting the minister. Please stand, ladies and gentlemen, as we... Please.
You may take your seats. This guy is a bit unfair. And all the other moderators, they would introduce all the spokespeople by talking about their profiles. They would have their fantastic faces up here. But anyway, at least he made you all stand. That's what's most important. Anyhow, so I'd just like to close this in a special way. First of all, by congratulating all of you for making it this far. Honestly, for all the events that we attend, usually after lunch you have about 30-40% of the room. But I can confidently say that we are probably about 70-80%, and that is, that goes to show the kind of commitment to the subject. I'd also like to specifically thank the hotel for keeping the room very cold so that, we could all remain focused and not dozing off. But most importantly, to thank the CMA, the USE, IOSCO themselves, and all the partners who, all the guys who have banners up here, for bringing us together, for making the room lively. All the moderators and the program director would like to thank you very much for a special role and for a fantastic event that we've had. My job is to provide the closing remarks on behalf of the board, and I'll just read them verbatim. Ladies and gentlemen, as we bring this Capital Markets Roundtable to a close, I'm reminded of one key takeaway from today's discussions. That is the power of collaboration in shaping the future of our capital markets. We've spent the day exploring how technology can be a driving force for financial inclusion and sustainable finance, opening up opportunities that were once out of reach for many. From the experiences of issuers navigating sustainable finance to the investment opportunities for both individuals and businesses, and the evolving regulatory landscape of the capital markets, it is clear that the road ahead holds immense potential, but only if we work together as market players and key stakeholders. Today's theme, which was tech-enabled financial inclusion, bringing sustainable finance and investment opportunities to everyone, challenges us to ensure that no one is left behind as we innovate. The conversations we've had today highlight how critical it is for all players, businesses, regulators, government bodies, and investors to align their efforts in pushing the boundaries of innovation and inclusion. It is not just about embracing the technology, it's about ensuring that the solutions we develop are sustainable and tailored to our unique context to transform lives, to transform businesses, and to transform our economy and our country. The insights shared today from how companies are leveraging technology to the vital role of regulatory frameworks have provided a roadmap for how we can move forward together. I believe that the discussions we've had across the week are just the beginning. They underscore a collective commitment to not only grow our capital markets, but to do so in a way that supports equitable and sustainable development. So, ladies and gentlemen, on behalf of the board of the Capital Markets Authority, I want to say well done and thank you to all those who have worked tirelessly to ensure all the activities arranged for the week were concluded successfully. Obugalo. Those are the famous words of the late Mutebile. I congratulate the awardees of the Public Education Championing I congratulate the awardees of the Public Education Championing to keep the momentum, Public Education Championing, yeah. Keep the momentum, continue creating the much needed awareness in the capital market space. To our panelists, thank you for sharing your expertise and for challenging us to think critically about the future. To our partners and sponsors, your support continues to drive these important conversations, and I thank you. And to all the participants, your engagement today shows the depth of commitment we all share in shaping the future of Uganda's capital markets. Let us take the energy from today's discussions and translate it into real, actionable steps that will open up investment opportunities for all. I'm confident that together we will create a capital market that is truly inclusive and innovative. Once again, I thank you all and wish you a good evening for God and my country. And I will invite myself for a photograph, as my colleague didn't do anything special for me. Thank you very much. Have a good evening. Oh yeah, my face is finally due to public demand.
He's actually, yes, please, a photo for the board member. But ladies and gentlemen, allow me ask two people to stand without whom this idea, Arnold, please stay there. They're going to join you. Without whom this wouldn't have happened. They came together and thought it wise to have what a beautiful World Investor Week, and a hand clap to them even before you get to know them. The CEOs of the USE and the CMA, please, can we stand as we clap for them? Madame Josephine Okuyu Osia and Paul Buiso, thank you very, 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 very much. Very, very much. Please come over and join the board member for a photo. I'm doing very well. Huh? So for your photo, are there any other board members of the Uganda Securities Exchange present who they left? So there's a photo here for the CEOs, and then immediately after that, the awardees, those that got different awards for different categories, please come with your awards and have a photo with the lady and gentleman here. And immediately after that, the sponsors, please prepare to come for a photo session. For a photo session here. Yeah, the sponsors, please just make your way here. the awardees just come. I think people want to be able to leave. Okay, are we all here? Okay. And then the sponsors, you all know yourselves, but I'll try to read them out. Stanbic Bank, representatives of Stanbic Bank, Vision Group, Smart24, MTN, Umeme. The sponsors, please come on. As I read your names, DPF, ICEA, Old Mutual, DFF, Level Africa, Britam, ICE, BOU, Gen Africa, Nick Holdings, NSSF, Presidential CEO Forum, and the Bank of Baroda. Please feel free to approach the bench. But come and we take a photo. Please, 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 just come and take a photo. And please let me know when you're done. Nick is here. Okay. Smart24, okay, Smart24 is here. And Level Africa. Okay. And the last category is the staff and the staff of the Uganda Securities Exchange and the Capital Markets Authority. Please make your way here. All the staff, they've come together to organize this event. Please a hand clap for them. All the staff of, Arnold, while you're still here, yes, yes, yes. Arnold, you're still here, yes, yes, yes. Yes, as a board, yes, yes, yes. Not staff. Please a hand clap for this. They've had sleepless nights. They've tried to put this together. They've cracked and tried to make decisions, very, very difficult decisions. And this has been a successful event, and I think we all agree. Ladies and gentlemen, be reminded that there's, first of all, a booths outside from the different license categories, providing information on how you can start your investment journey or what you need to do. So please feel free to visit the booth. And also, there's tea. There's tea outside. So we don't want to get an audit query for you not having taken the tea. So feel free to the official